think we're live. Power Hour, August 1st, 2022. It's pretty wild that it's already August. I can't believe how fast this year is going. I said that last year and the year prior to that. I'm getting older. We're all getting older. Take that with a grain of salt, boys. All right, so let's go through some of the stuff today. Today was quite uneventful, to be 100% honest with you. We had a push up off of the market open when news came out regarding PMI. I'm going to go ahead and turn down this fucking music. And then we got a sell-off, and we are currently I'm assuming we're pretty close to the open here. Yeah, only down 0.15%. So not a bad day today. We've obviously been in a strong uptrend over the last few weeks. I'm not surprised to get a pullback. You guys shouldn't be either. I wouldn't be surprised to get multiple pullbacks in a row and still continue to the upside. RSI still firmly above the 70 in SPY. This is the first time we've been above the 50 RSI since mid-March, but obviously things are different this time around. The Qs, we are holding the new risk on level above 312.50, 313, currently at 315.65. We actually made a very aggressive push to the upside earlier today. Did sell off midday. Still, nice push today by the Qs. Once again, RSI is above the 50, so love to see that. Also, small caps here actually pushing end of day up 0.45. So we absolutely love to see that IWM is up today. We like to see the fact that small caps are performing well. IWO holding its new risk on level above 22750, currently at 23031. So we know small caps are moving. AMC reports this week. Just want to point that out. So small cap growth is up. You have names like AMC that are reporting, currently up 4.74%. AMC, who fucking knows? Who knows what's going to happen? GME is up as well, 2.41. So IWO up. We like to see it. IWN is also up 0.52. So both of these are up today. IWO is the stronger of the two, but both of the small cap spaces are up today. That's incredibly bullish. So good for us. We've been able to identify that. Yes, looking at other things here. Let's look at factor analysis really quick on the in TradingView itself. We have IWN up against SPY, which is your IWN is your value, IWM, which is just your small cap in general, IWO. So yeah, small caps in general pushing up against the greater market indexes today. Absolutely love to see that. The VIX is up 7.64%. It was up only 5% earlier today. So it is pushing up here. SPY's coming up on potentially break even. It's pretty wild to see. Potentially see a green close on the SPY and the Qs after drawing down today. Go over sectors, kind of have general idea of what's going on here. Staples up 1.34. A few of you guys are in positions. Callow's in Walmart. And Hano is in Target. Hano is in gap fill territory. New 50-day high. TGT. RSI above the 50. Great play there, Hano. Even on a streak, XLY up 0.93, assuming that a lot of that has to do with Tesla. Tesla did break above the 200-day moving average by quite a few percent, but then got beat to shit along with the rest of the market midday. Still up 0.79%, so it is now lagging XLY, although it was leading. Amazon gap up, holding its gap. We like to see that. XLI is pressing into high of day up 0.43. So XLI had actually gapped down, traded slightly below the pre-market lows here, and so far is pressing end of day up into new high of days, XLI. Look at that. So industrials, new high of day. There's a few names in our repertoire that we've been looking at to go long or are already long in XLI, so it's nice to see XLI pop up. Tech now is green on the day, XLK. XLC also up slightly, 0.05. XLC still looks like the weakest of the growth sectors. I really don't like this fractal that it's in. It really does look like a bear flag, to be 100% honest with you. But obviously, if the market is going to turn a corner here, XLC is going to catch some of that regardless. So I don't know if you'd want to short XLC, but still, I don't like the long there's better looking areas of the market for you to be going long than XLC. Healthcare, slight underperformance, financial slight down, material slight down, real estate slight down, and energy slight down today. Actually, energy is straight up down 1.52. Looking at sectors, XRT up 2.74. This is your retail industry. Looks like in about a day or two, we're going to get a golden crossover. That 20-day moving up and over the 50. The 200 is still sloping down. And there's no prevalent levels here breaking. I'm going to give XRT a lot of leeway. I do not want to even think about going long some of these names until we're above 67.5, and we're currently at 65.34. So another day or two of XRT to the upside. Maybe we can start having the conversation of retail names might be coming back. But I'm in no rush to go out and buy retail names as long as we are trading sub that May-June consolidation. So realistically, anywhere north of 66.50 or 67 is just off limits for me. Like to see it though. Like to see it push. Home builders 50-day high today. So another 50-day high from ITV Jets, trying to push up and over its 50-day moving average. Still, airlines have just been absolutely crushed. One of the few sectors though that did not break down to a new low in May, instead waited until June. So this is a little bit of a different type of name that we've been looking at. A lot of the different names stamped out their lows in May, came back down and tested them in June. This didn't stamp out a low whatsoever in May, actually, which is surprising to see. I didn't notice that until right now. Regional banks up, pressing into, I think, a 50-day high. 50-day high for KRE regional banks, getting the golden crossover tomorrow, it looks like. The 200-day moving average still slightly sloped down, but the RSI is peaking its head up near 70. So regional banks, we know what that means. It's the risk-on area of the financial sector. We like to see that SMH. What a very nice candle. Oh, I'm looking at AMLP. Nice candle from SMH. I believe this is a 50-day high, if I'm not mistaken. 50-day high SMH. Nice recovery in AMLP, which is an energy-related name. And then you got all of the dog shit. OIH down 2%, TAN down 2%. It makes sense for solar to chill. It does make sense. Just want to point that out. We have updated most of our charts for solar. We do want to grab some positions. I'm not sure if any of them opened themselves up for an opportunity today or not. If you guys saw anything, feel free to throw it in chat. My account has still not been funded properly, so I did not open anything up in the options account yet. PBW down as well, 1.2%. So both clean energy and solar slight down. Insurance down. Metals and mining down. VNQ, GDX, etc. So today was it was boring, but not in a bad way. It was boring in that we've essentially just reclaimed where we opened. I would love to see a green close on the major market indexes, but if we don't, that's all right. But just to see them claw back from their lows has been exciting to see. So open up the discussion dialogue here. What names in particular do we want to look at? What trades are you guys currently in that you would like second opinions on? TLT crushed it, 50-day high today. Hanno and Dustin, you guys should be up relatively large. This is high of day for TLT. Those September contracts that we bought, those things should be up over 50% at this point. Had the conversation earlier. Hanno said, kind of want to roll these out. He bought the Septembers. Just want to point out here that if you're in the Septembers, you have about 45 or 46 days till expiration. That's right in the wheelhouse of something that we would want to be going long, actually. And so he's right now 2 pennies away from in the money. And we've already had this conversation, so this is just a repeat. But for anybody that didn't read it, he's 2 pennies away from in the money, and he has 46 days till expiration. If you were to close here, the potential reward is going to be a bigger loss than the potential risk at this point. Because if this thing continues for another 20 days, which is still within our wheelhouse of do we hold this position, we don't have to trim until we're getting close to the 20 days till expiration. So you have another 3 to 4 weeks here of holding this, 3 weeks at least. If this thing just continues up and we tap 125, 126, that's going to be $5 or $6 in the money, and all of a sudden each day the profits are going to exponentially increase. You're going to make more money past 120 and some change than you were sub 120. So if you do, or if anybody is listening to this, want to open up something and you're in a similar situation where you're already up but you have a lot of time, think about either opening up a separate position entirely, treating it as a completely different position, or simply don't and just wait because you have a position that is moving and working well. Something that is hard for a lot of newer traders to understand, and something that Marcos and I actually went over during a one-on-one like 2 or 3 weeks ago, was you have the tendency to take winning trades, close them because they're up, and reallocate capital to shittier ideas. And I don't mean shittier as in you didn't do a good job analyzing them. It's just they haven't proven themselves yet. Remember that conversation, Marcos? If you have a winning trade and you have time on your side, don't be so quick to close that trade to relocate that capital into something that has not proven itself yet, if there is still more room for reward on the existing trade. Let's see, what else did we go over? Go through some Koifin stuff really quick. Actually, I don't know if you guys saw this, but I want to point something out. I was doing some napkin calculations on one of the emails that I'm sending out here. That's what I want to point out to everybody. First off, shout out Mike. Out of everybody that's been here, Mike has shown up to the most things since he's joined. He's very rarely missed a meetup in general. He's here every morning. He's here every power hour unless there's something that is outside of his control. And he nearly comes to every single strategy session, Sunday, Monday, and Wednesday. I want to point something out, that we officially have 14 hours per week of trading together. We have the Sunday night strat session, Monday night strat session, Wednesday night strat session. We have the 30-minute to hour-long Sunday one-on-one if you want it. We have pre-market open and pre-market and power hour, which are each an hour. So that's 6 individual hours. Extrapolate the pre-market and power hour out 5 days a week, 14 hours per week that we are together in an official capacity. That's 56 hours per month. That's 672 available hours per year if you want. And Mike has done most of that. I posted a video, or a picture rather, of one of his first actual trade reviews, because when Mike first joined, he was just like everybody else. Not timid per se, but you're still learning the ropes. You're not extremely vocal. You're not willing to really put yourself out there yet. And he started posting his trade reviews. I found some in the old Discord and I posted it. And it looks like somebody that had never really traded before, which makes sense because he came in here with an elementary level of what he was trying to accomplish, and he was day trading the 1 minute chart on plug. And back in 2020, there was a lot of day trading going on. But if you look at that chart versus what he posts now, I'm going to post it again in Discord so anybody that didn't originally see it, I want you to look at the difference between the two charts here. It's absolutely insane. And I'm going to make a point to say that a lot of this is because he just simply shows up. He's just fucking here. And there's no substitute. You cannot be successful. I'm not saying that what we do in here is the absolute best in the world. I'm not saying the system is the absolute fucking best. But what I am saying is there's no substitute for fucking showing up and just putting in the effort. Look at those two charts. Right off the bat, you can tell that Mike is a better trader if you just look at the charts. I mean, and that Amazon chart that he posted was right after a 50% winner in an Amazon butterfly. That first chart, I don't even fucking know. Day trading plug. So that blew my mind. 672 hours per year available for you guys to be in here studying. And also, I want to point out, I'm going to pat myself on the back. If you guys are putting in 672 hours, I'm putting in more because I'm putting in the one-on-ones with individuals, which means I'm putting in like 3 or 4 hours per Sunday. That blows my mind. Obviously, I'm not trying to put anybody down, but I'm spending like 1,000 fucking hours a year in here, which is fucking nuts to me. There's a reason why we're able to catch things before they happen. It's because we're just fucking here. Seriously. So let's look at TLT. Said it, let's see, it crossed 120. TLT was the original price target. If we actually pull up the trade review, not review, but the trade idea here. 1.4% ADR market cap, irrelevant, slow moving ETF that gives you exposure to the bond market. Sub 50 IV, no need to spread unless it's to lower cost basis. 125s for October, run $1.75. 120 calls for September. That's what I originally bought. Let's see. Dustin bought October's July 2nd, 22nd rather. Nice, man. Great play. So what are we going to do now that we're breaking above 120 and that was the original PT? You guys see why it was the original PT, right? We front ran the symmetrical triangle breakout. Do you guys understand why? Because this is not technical. Like why we front ran the TLT breakout on the symmetrical triangle has nothing to do with technical analysis. So if you do not understand the intermarket relationship between tickers like TLT and IEF and HYG and all of these and their counterparts being interest rates, you need to ask or learn. We had the idea that the 30-year bond yield was going to break to new lows. Remember this conversation? Just posted the chart. We looked at the 30-year bond yield a few weeks ago and we said this right here, this area, I'm gonna go ahead and draw a box for anybody that's watching the stream later. This is a first of a potential series of lower highs. That was the thesis. What happens? And originally we had looked at something like this, right? If you go and dig through all the charts we posted, we said maybe there's an ugly head and shoulders diagonally across this top. And this area going back to July 14th, July 11th, maybe this is the first of a series of lower highs. I'm going to post the chart in Discord. So what did we do? We went and looked at TLT. We went and looked at IEF. Remember the conversation? There was more liquidity in TLT, more volume in TLT, but IEF was following the same sort of idea. If you look at IEF, it's breaking out as well as TLT. IEF, ironically, is probably breaking out better than TLT, but unfortunately, IEF did not have the same type of liquidity on the chain. I'm going to post IEF. So we said, listen, if rates have potentially peaked, right, we would expect bonds to then rally. As yields come down, bonds get bought. As yields go up, bonds get sold. It's an inverse relationship. So everyone's fully aware. That's what gave us the juice to look at TLT and front run the symmetrical triangle. Now, what is a symmetrical triangle good for? If we front ran it, a PT. That PT being 120, which is the top of the symmetrical triangle. So what do we do from here? We go, okay, we're up here at 120. We can expect two things. One, short-term resistance based off previous fractal high, May 25th, May 24th, May 27th area. That's what formed the top of the peak here in the symmetrical triangle. Some short-term resistance, but also if we blow past 120, which we're currently testing, we use this as what? What can we do right now with this 120 area if we break above it?
Stops up.
Stops up and new risk on level, right? Yep, exactly. Yep, Dustin, both of you guys are right. So that's why this shit matters, right? There's, as corny as it sounds, there's levels to this shit. And we're just following the levels up. First PT gets hit, use it to aggressively move our stops up. That's something that Mike said when he first joined the group 2 years ago. He learned stops are not purely for defense. You can use them as an aggressive tool. Think Legion of Boom. 7, 8, 9. Oh my God, 9 years ago. Number one scoring defense in 30 years. You can use your defense to score points. That's what we do with stop losses. Looking at TLT and IEF right now on the chain. IEF. IV right now is 10. IV rank is 54. It's TLT's 43. IEF, looking at the open interest here just in case, there are way cheaper. I will say this. Let's look at the IEF has an ADR of 1.42. IEF has an ADR of 0.6. I still like the TLT better. But IEF is way cheaper. I will say that. You can buy 81 days out. The 110s, you can buy them for, what is this? $63. You can buy one. You're $5 out of the money. It's deceptively far away. I just want to point that out. The 125s in October have 23,200 open interest. You can get one right now, sub 50 IV for $243. I would probably wait until tomorrow. I would wait to see how we react to this 120 level tomorrow. If we pull back, you can get something cheaper. If you don't pull back, the existing positions should be up relatively large compared to the close today. But I think at this point you're chasing premium, and that's what we don't want to do specifically in something like TLT. Dollar yen is down 5% in the last 13 trading sessions. All right, feel free, guys. Anything you want to talk through, let me know. If not, I'm gonna go through some Koifin stuff really quick. We have a meetup tonight, 7 p.m. Let's talk through these. Let's see, do we have enough data here for the quarter to date? Man, we're so close. Maybe one more week and we'll go to the quarter to date charts. I hate using these 3-month charts. But for the sake of it, let's go through the 3-month chart. Anything change here? US sectors 3-month. Factor analysis 3-month. Some more factor analysis, this time just straight growth value, momentum, small cap, etc. How about some fixed income factors, since we're talking about bonds? Check out high yield corporate debt. Let's go year to date and see where it is. High yield corporate debt has rallied off of the lows, down 14.37, now only down 8.35. Can't scream bearish on that. Was listening to the All-Star Charts Spaces today. JC Perrette said that he knows a guy who knows a guy who works for Exxon. And they are expecting upwards of $150 to $200 a barrel of oil at some point. And that he believes Chevron is the stronger of the stocks. For what it's worth, we'll see if that plays out. Now that it's on stream, I'll remember to look at it. I want to see if it ends up playing out. Just running through Koifin and just looking at different shit really quick. See if there's anything here we can take away from it. Alright, not so much. Let's chat really quick, cup and handle Chewy. You want to talk through your idea here with the cup and handle on Chewy? $869 new names, 50-day high today. Average volume over 1 million brings the list down to 156. Option and shortable 150. Change from open up 135. There's 135 names that are currently green on the day and hitting 50-day highs. Cup and handles can definitely be formed in downtrends, but I think you're overlooking one key factor in the cup and handle. Anybody can answer this, but a cup and handle is typically two fractals side by side, right? What are the two fractals?
Rounded bottom and bull flag.
Yeah, rounded bottom and a bull flag. So what I'm going to post really quick, if you're on stream you can see it as well. Posted it in Discord. Is there a bull flag there? Yeah, there's no bull flag. So it would not be a cup and handle. In my mind.
If you go to the weekly, it looks like more of a flag than daily, but it's still a reach.
I think that comes. That brings the next question though. How long do you want to see a consolidation on a bull flag before you take it? Because if we go to the weekly, that's 4 weeks. Well, I guess.
Yeah, that's a good point. Yeah.
To point be more like poignant about that though, I guess today counts as 1 week on the candlestick chart and it's only been 1 day, so if it like broke out today or tomorrow, I guess that would make sense, right? But realistically, I don't think I'd like to take Chewy at the very minimum until you're above the 200-day moving average at 45, because you have the fractal that consolidated there in July from the 8th to the 22nd. Just nothing but chop for a pop down. You get a break back up, congrats, but I don't know if I'd take it until we're above that area. And at that point, you're only $1 below the 200-day moving average anyway. Not saying that's the absolute best idea, but you want to try to stack things in your favor. And if you would expect the 200-day moving average to potentially give you short-term resistance, you might as well just fucking wait for it to break up and over. Hey, guess what I just found? a rounded bottom, accumulation zone, with a series of higher highs, riding the 20-day moving average as dynamic support. You guys want to guess what it is? It's an IGV name. God, dude, volume bars on TradingView are fucking annoying sometimes. RR will still be good. You're absolutely right. You're just going to be decreasing that risk by waiting for the pop up and over the 200. Check out Roblox. That is a series of higher highs headed into an ER, 7.71% ADR. ER is the beginning of next week. 200-day moving average all the way up at 61. It's a 34% potential move to the 200-day. Looking at the chain really quick. This is an expensive play. Wow. Not gonna lie, September's only go to $60. Get a little bit of a gamma squeeze here or something. It's a 4-to-1 odd from 50 buy the 55, sell the 60. You can buy the 55 and sell the 60 Roblox. Cost you 97 for a 403 return. I'm kind of surprised actually. What are the August 19th looking like? Somebody loaded the fuck up on the calls, the YOLO calls. Got the 55s, the 50s for 7K open interest and the 55s at 2.35. It's a 3-to-1 R to R. That's an interesting play on Roblox for the September contract. I'm not gonna lie, it's a 4-to-1. If these funds settle, this might be something that I would want to buy because it's in the wheelhouse of how much I'm trying to spend per position, maybe a little less, but 97 for a 403 with a P50 of 60%. Buy the 55, sell the 60 September 16th. $60 is right below that 200-day moving average, so we keep moving through scans, but that's a name. There's a lot of names. We're gonna have a lot of work to do tonight. Rivian, another 50-day high. Earlier today, it is holding its green though. Remember, Rivian was a particular play that we were looking at potentially taking. These September contracts, lots of open interest on these. It's not necessarily that expensive. 88 IV, gonna want to spread this thing. 6.62% ADR. Let's see here. Can buy the 40 and sell the 45 for $99 for a max profit of 400, so 4-to-1 there. 40-45 on Rivian. It's not a bad play for September if you want to get some exposure. It's a spread. You're going to hedge against that 88 IV. The IV rank is hilariously only 18.6 with an 88 IV. I'll post the chart here. We've looked through Rivian a few times, but these are ideas we're going to be going over tonight, by the way. So got Starbucks traded, or we charted this because of Alex. So the trade that he wanted to take, we had a 50-day high today and holding the open here up 0.25%. I don't like Starbucks unless we pull back here. It's too far gone. A shit ton of consumer cyclical is on the 50-day high. A lot of these are not fantastic looking charts, but McDonald's is pushing into a potential all-time high above 270, currently 265. Post earnings. I mean, they're already through earnings. You don't have to worry about anything. The Septembers, this is a kind of a slower moving name though. McDonald's at 1.75%. We can look at the Septembers and the Octobers. The 270s, what is this? 21% IV. It's an expensive play, so you're probably going to want to spread it just simply because it's expensive. By the October, let's see here. Doesn't look like there's going to be anything that's good from a profit, from a risk to reward standpoint. You can buy the 280, sell the 290 for a 4-to-1, but you're looking at a $200 position in McDonald's for a 280 move. It's not the worst from a technical standpoint, but it's pretty expensive. So we just had a bunch of names, more names pop up. 129 now on the 50-day high. I haven't even got through page 2 yet. We're going to have a lot of shit to scan for tonight. Kellogg is near all-time high. Sorry, not all-time high, 50-day high. Landon was in Kellogg. I don't know if he ever ended up holding it, but I know Celsius had some accounting stuff. I was reading what Ian and Kevin were talking about, but it's on the 50-day high as well. Coca-Cola, Pepsi. Check out Pepsi right now. Pepsi's at Pepsi hit an all-time high today. Their past earnings, 50. Okay, here we go. Got to play on Pepsi, boys. This is an all-star chart play. They got in like a month and a half ago, so I don't know if they ended up closing that position, but if they did not, they should be right now thinking about the fact that they are coming up on break even. So we have maybe a slight advantage on the all-star boys in this Pepsi play. Pepsi 22% IV, 21.5% IV rank, so it's going to be a spread if it's too expensive. But let's just draw a basic horizontal level where we're at right now, 177. This is a fun play, actually, Pepsi. Make sure there's enough open interest on the chain. And the shit that we want to play, yes, there is. Let's draw a basic fib off of this range. We have a price target near 190, current 177. 190 is, well, shit. 185, 190, call debit spread. $72 for a max profit of 428. For the September. The Octobers, 185, 190 is going to give you a little bit more than a 3-to-1, about a 3.2-to-1 R to R. That's a cool play. Why not? We could run something on the Septembers, I think 46. $185, $190. Could just buy the fucking 190 straight up and not even hold it until at 0.11 delta. I'm not really a huge fan of that, actually. And I can't imagine Pepsi's going to come out of nowhere and go parabolic. But yeah, Pepsi is a play that we're going to be looking at tonight as a potential entry. Posted Discord. Yeah, no. Nice, Mike. That's what I'm looking at too. It makes sense, right? We break above that range, that's a level shift to the upside in Pepsi. Twinkie. We're not going to get through all 7 pages before the more names just showed up. Now we're up to 130. We're not going to get through all the names here before the end of the session, but we'll go through all of these tonight. A bunch of regional banks are on here. It shouldn't be surprising. KRE is up. A lot of ETFs in general. TLT. Look at that. TLT, boys. Got some healthcare names. Some of the scammiest shit you'll ever buy on here. PAVM, for example. We're just going to skip all of the healthcare for right now. Industrials, we got Copart. CPRT, it's a name that we've charted. Boeing, 50-day high with a gap up. Boeing gapped up today. Impressive. Talked about builders this morning, BLDR. Gap up and held it. A few different real estate names, but I'm going to move past those and go straight to tech and see if there's anything here that stands out in the tech space. We got some small cap stuff. I think it's small cap. Is it small cap name COMM above the 200-day moving average? This thing is up 60% over the last 15 trading sessions or so. We have earnings coming up. Not my favorite stock, but it's up. What else? CDNS. I have a cute little symmetrical triangle on the CDNS chart. One of you guys must have brought this up because I don't remember it, but god damn. Look at this. Off of the 2020 highs. One of the rare names that did not come down and get even close to the 2020 highs. Look at this. That's a fucking beast of a company, and we are pressing into all-time highs. CDNS. What does this company do? This is something that we should be watching. It's post-earnings. It has not missed an earnings since 2015. Okay. Hey man, I think this is an important company to potentially look at. CDNS. We got September's and November's. Are there any open interest on this? Because this is awesome. We have very little. Shit, that sucks. Well, maybe we can find something tonight if it makes sense. We got some September plays. It's super fucking expensive. Low IV rank. Look at that later tonight. We got 5 minutes, guys. Any questions about existing positions? Feel free to throw them out there. Make sure everyone's taken care of before we hop off for the. I need to go to the goddamn gym before tonight, and I don't want to go. KOPN, a name that we charted a few strategy sessions ago. Chart was deleted. We are pressing into 50-day highs off of this rounded bottom. Remember this, you're going to recognize the fractal because every single fucking name looks the same here, but don't mind the horizontal level. I'm just throwing some random line on there to give you a reference point for sentiment shift. Becomes very apparent when you just segment the chart off. Above that level makes sense to be long more than short, right? So coming up on earnings here, COPN, this is a semiconductor related name. Super fucking cheap. So you're going to want to go equities with this one. And yeah, I'm not going to go through the rest. I'm going to wait until tonight so we have something to do and get more in depth when it comes to the actual trade setups and shit. I'm going to look at Bukowski's blog really quick, see what he posted about. Whoops, I didn't read the Friday post. Let's see here. Okay, and the Monday post he just did. Hey, guess what? He likes that. He likes that fractal from May to June that we like as well. How high will the index climb? My guess is to the level of the circle middle at area D. Area D is that fractal that we've identified. The index has made a strong push higher, and at D there's a knot of resistance. That combination suggests the index will hit that resistance and drop. So we will check. Okay, I'm gonna go ahead and cut the stream a few minutes early so you guys can say whatever you want before that market closes. If you're watching the stream, I appreciate you. Thank you for watching this shit. I hope you guys learned something.